All right, today we're going to talk about taxation, how this will impact our economy and our country. Definitely in August 2022, Malaysia agreed in principle to implement the global minimum tax GMT of 15% on certain multinational corporation MNCs. The global tax was instituted by the Organization for Economic Cooperation and Development OECD, which said 136 countries, including Malaysia, were ready to undertake reforms in the global taxation system. The implementation of the global minimum tax GMT aims to introduce a minimum tax rate of 15% for multinational corporation MNCs operating in multiple jurisdictions. And according to international tax leader of Deloitte Malaysia and Southeast Asia, Tan Hoi Beng, said while some countries have delayed implementation until 2025, Malaysia is considering implementing it next year, and taxpayers are urged to prepare for potential changes. And now we bring Tan Hoi Beng from the international tax leader of Deloitte Malaysia and Southeast Asia live with us right now. I want to say thank you, Hoi Beng, for joining us this morning. Fantastic to have you talking about GMT and your recent comment on this. Maybe you can explain to us, maybe enlighten us how the implementation of the global minimum tax GMT aim to alleviate, we can say reduce the financial burdens of the governments, including Malaysia's, and what specific benefits can be expected in terms of revenue generation, please.
Good morning, Nina. Thanks for having me. So maybe we just ask ourselves a very important question. Who
categories of taxpayers that will be impacted? Number one is the Malaysian headquartered multinational, right? Especially the large listed group in Malaysia and having various operations overseas in Malaysia. So that's first category, what we call an outbound scenario, right? And the other category is actually the inbound one, whereby is a Malaysian subsidiaries of the foreign MNC, right? So there are two categories of taxpayers that will be affected, right? And in terms of the benefits in terms of revenue collection, maybe allow me to be very clear about this thing. Actually, the GMT thing, it wasn't meant to for Malaysia to collect additional revenue. The situation is if Malaysia doesn't implement GMT, other countries will come in and then take away the tax collection. So it's more to protecting our revenue base, right? So in that sense, there'll be additional revenue collection, but I think the revenue collection will need to be used to maintain Malaysian competitiveness because of GMT. So that is the situation in terms of global minimum tax. Yeah.
All right. As you said that if Malaysia doesn't implement GMT, then the possibility for other countries to take it from us, the benefits and everything. Maybe we can put on the potential implications will the GMT have on multinational corporations, MNCs operating in Malaysia. The big question is, will it affect their tax planning strategies or profitability or even overall competitiveness?
Thanks. That's a very good question. And this question is very relevant for the inbound situation. So, for example, you have a UK MNC based headquartered in UK and having a Malaysian subsidiaries. And let's say the Malaysian subsidiary is enjoying a tax holiday in Malaysia for 10 years, right? So clearly, with GMT, without GMT, the effective tax rate is probably zero or very low. But via GMT, this company enjoy incentive, right? You still have to do a top-up tax up to 15%. As a result of that, the efficacy of or the effectiveness of the incentive in Malaysia definitely is in question. And likewise, the problem applies to other countries in the world as well, right? The issue of whether GMT marks the end of tax incentive, there's a big question mark here, right? So therefore, as a result of that, how would they be impacted? Those that are enjoying tax incentive, they really have to do some number crunching and then to see what's the impact of tax holiday, and potentially they may need to also, approach Malaysian investment agency to discuss the way forward. More importantly,
for example, the collection of the 15% on the subsidiaries of the foreign multinational, probably that fund can be used to one way or another to continue to enhance Malaysia's competitiveness. We have to look at the non-fiscal factor, for example, to continue to ensure we have a supply of labor, rule of law, intellectual property protection, so on and so forth. So the non-tax or fiscal factor will be very key moving forward. Yeah, Nina.
All right, talking about the overall you have been shared, it definitely takes many layers considering the implementation of GMT. Maybe a little bit more on how might it impact Malaysia's attractiveness as a destination for MNC to establish their presence or expand their operations. Are there any potential challenges or even advantage that should be considering and some of the things that we are not seeing currently?
Yeah, so thanks for that. As mentioned earlier, yeah. So those MNCs that are already paying normal tax at normal rate 24%, right? This GMT should not impact them because that's not going to be a top-up tax because they're already paying tax at 24%. But those potentially affected will really, by the impact, those are enjoying incentives. These are the ones that probably will be affected. So they need to assess their situations. But I want to say is that the same problem applies to all countries. So Malaysia will just need to step up in terms of considering what else that Malaysia could offer, yeah, in that respect, yeah.
Maybe you say that Malaysia needs to step up and maybe analyze a little bit deeper. Maybe how about we talk about in the light of GMT, what about maybe a little bit detail on the adjustment or the changes, the possibility of might MNC need to make to their financial strategies or tax structure to ensure compliance and optimize their operation, especially in Malaysia, Hugh?
Right. So this GMT, as I mentioned earlier, is a big change. It's the largest tax reform in history so far, right? So the multinationals, whether they are the first category or the second category, the one that I mentioned earlier, they need to make sure they're in full compliance eventually. It means they need to ensure that the accounting system is able to generate the appropriate data for the computation of GMT, right? So in terms of data readiness, in terms of people readiness, technical readiness, that is quite key. And in this respect, probably I'll just call out one important point. On 23rd of May, this month, actually last week, right, the International Accounting Standard Board has actually finalized the amendment to International Accounting Standards, 12, right? Like this IAS 12 requires multinationals, including the Malaysian-based multinational, including a Malaysian-listed company, to have a proper disclosure in 2023, assuming their year end is 31st December. One big disclosure is coming up on 31st December 2023, and subsequent to that, there'll be various disclosures in terms of global minimum tax. So what I'm trying to say here is that with the amendment to IAS 12, right, the CFO, especially on for the Malaysian listed company, I think it's a wake-up call. They should not adopt wait-and-see approach. I think they really need to look into this and act on it because time is of essence in terms of data readiness, disclosure-wise, so on and so forth, right?
Right, talking about that, are there any specific industry that might be affected by the, as you said, they have finalized and aligned the structure and everything. What is your comment on this?
In terms of the existing structure, people, of course, around the world are trying to see, whether there are ways to mitigate the GMT impact. I think people, taxpayers will continue to look at ways to mitigate the impact. But for now, the most important part is really for people for the taxpayers to understand the impact on the group as a whole, the impact on cash flow if there's a top-up tax, the impact on dividend distribution, example, if there's a top-up tax, and then your data readiness, as I mentioned earlier, the impact on tax incentive. Do you need to see the investment agency in Malaysia or elsewhere in the world to negotiate further on their existing tax incentives? So that kind of thing, a broad spectrum of areas that one needs to really look at, and that I repeat that applies to Malaysian listed company, Malaysian-based MNC, as well as the foreign-based MNC, right? So that readiness must be a key agenda at this point in time.
All right, definitely that is one of the effort. We can push, look further on the problems, challenges, what measures or incentive that can the Malaysian government introduce to even mitigate any potential negative effects, or maybe we can say problem issues of GMT on MNCs, and even to sustain the country's appeal as an investment destination.
Yes. Because this GMT affects all countries in the world, so in that sense, Malaysia is not alone, right? And every country is also trying to step up and ensure that they provide better facilities. They make sure their own country remain as a preferred destination for foreign direct investment. So I would say it's going to be more competitive moving forward. And at the moment, clearly, Malaysia government realized this and clearly, are strategizing on what they could do further. I mean, apart from giving, tax holidays. For example, Malaysia's government could consider a special regime called qualified refundable tax credit. That is in a way less harmful tax incentive for GMT. So that's something that the government can look at. And also, as I mentioned earlier, the non-tax factor, right? I mean, the general environment, business environment in Malaysia, the ease of doing business, right? The supply of labor, all that kind of thing. Actually, it's very important to FDI as well, not only on tax. Yeah.
Hui Bai, I definitely want your personal opinion. Rating from 1 till 10, can you rate the Malaysian readiness to implement the global minimum tax?
This is a very good, very good question. I think the Minister of Finance, the Inland Revenue, are fully aware of this. They have been studying this, and I'll rate that maybe 7 to 8 out of 10.
7 to 8. Wow, 3 more to go. Definitely, Malaysia's commitment to implementing the global minimum tax.
I am very confident that it can be done. It will be done on time. I'm quite confident about that because the government has looked into this a while ago, not just now, right? So we should be able to get this through. Yeah, either 2024 or 2025 does not matter, but Malaysia should be able to prepare for this well. Yeah.
Yeah, definitely. Hopefully, moving forward, this implementation, the planning, the restructuring, the reforming can reflect its dedication to international tax reforms and ensuring a level playing field for businesses on national and even global. I want to say thank you very much to Tan Hui Bang, the international tax leader of Deloitte Malaysia and Southeast Asia. And all of our discussion will be uploaded on astrawani.com and all social media.